Doug Ramsey is now here with me. He's the Chief Investment Officer of the Leuthold Group, and it's good to see you.
Good to see you.
So walk us through the playbook, the strategy. What do you do with all of this swirling about?
Well, I listened to Michael's comments about the tariff threat. I think it's the timing of the tariffs, with the economy already sort of fragile in terms of real personal income growth only growing about half the rate it was a year ago. 1.8% was the January number versus 3.8 a year ago. Non-farm payroll employment is at what we call a stall speed. It was strong employment report on the surface last week, but 1.3% year-over-year growth. We've never before slowed to that rate and not escaped a subsequent recession. And now, on top of the tariffs and the uncertainty they brought, is this wealth effect. And we've been talking about this for quite a while, how we think very likely the upswing in the market we saw in 2023 and 2024 prolonged the economic expansion. And now our fear is that, a shallower correction than normal might actually trigger the downturn. There's a great line, this was from George Soros years ago. He said, financial markets have a very safe way of predicting the future. They cause it. And I just thought that was a wonderful summary of this interrelationship between markets and the economy. Sure. So now, just in terms of the size of the economy relative to the stock market, we peaked just 3 weeks ago. Hard to believe. The stock market was a little over 2 times GDP, 205%.
Wow.
This roughly 10% correction now that we've had is therefore more than 20% of GDP in terms of wealth. And we've had full-blown bear markets that didn't take down wealth, again, in relation to the economy that large.
Yeah.
So I'm very concerned about this becoming a self-fulfilling prophecy.
And that's why you guys trimmed exposure, because we've talked to other guests this week who've said, you know what, look at Alphabet trading at 16 or 18 times earnings, or NVIDIA down to 20 times. They're seeing areas of opportunity to kind of pounce, but it sounds like you're moving into more of a cautious position.
Yeah, and those, the big tech would not be where we would go. I mean, I think the air is going to come out of those multiples in a big way over the next couple years. Whereas we've really, and this is probably our strongest conviction, is a rotation away from large cap growth and into traditional value sectors. It's sort of underway, on a day-to-day basis. You'll see it flip-flop. But
you wouldn't say that Google's a value stock right here?
No,
I mean, at 18, 16 times, they've got way more. I mean, I know that's not a value story, but what would be a value stock that you would feel like is a slam dunk, or an industry or a representative slice?
Oddly enough, I mean, despite our concern about the economy, we have moved heavy into financials.
Really?
Under, potential deregulation under the new administration. It's certainly one of the few areas that might be tariff-proof, right? I mean, am I going to argue they're going to hold up all that well during an economic downturn? No, but I think it's the cheapest sector. We use a fair amount of relative strength with our disciplines, but we're almost 30% financials in our portfolios versus like 8 or 9% a year ago. So part of this, growth to value rotation.
Where else, just to give a couple of examples?
We've been in the home builders, and we've been in systems software. So, a couple areas that are battered. We're not completely out of the big tech names. And then, we've, as you mentioned, put on an increased hedge, and it's pretty rare that we do this. We have our own short selling strategy in-house, the Grizzly short selling strategy that's quantitative. That's usually how we handle our portfolio hedging, but in view of the circumstances surrounding the big tech stocks, we have a small short position in QQQ.
That's really interesting.
That's working now, and it's not often that we move beyond our home cooking, but we did that. That's, I think, where the biggest downside risk here.